And it's time for the Personal Finance Corner. Faye's in the house. Faye, what's up for discussion today?
Well, we're still on the tax quarter, so we're going to figure out if the National Savings Certificate makes sense and for which of us it makes sense and when we should be using it. Let me bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, thank you so much for joining us. Since we're still reviewing tax saving options for the year, let's talk about the National Savings Certificate. Now, currently the interest rate on the NSC is 8.6% on a 5-year option and 8.9% on the 10-year option compounded half-yearly. Now, given the various debt options we have within Section 80C, and there are so many, do you recommend the National Savings Certificate to any of our viewers?
NSC is a reasonable investment for completely risk-averse investor. So, if you don't want to take chances and you don't, the other advantage of NSC is that you can borrow against it by pledging it to a bank, just in case you need the money in the interim for a short term. So from that standpoint, it is very safe, and if you can lock your money for 5 years and want decent return, NSC is a reasonable choice.
Alright, so the 5-year National Savings Certificate makes sense for those of us who are completely risk-averse. Dhirendra, we have a question on tax from one of our viewers. Karan has written in. He's 23 years old. He currently invests only in the PPF. Now, he would like to start investing in mutual funds for the long term. He's thought about putting aside maybe 10 or 15,000 rupees a month. He wants to know if he should consider increasing this value as he goes forward, and if he should consider investing perhaps in the ELSS or any other such investment option. What advice would you give him?
You are 23-year-old, and if you should be investing a very small part of your money in PPF, though PPF is safe and it yields reasonable return, but it's not able to beat inflation. So you should have 10, 15, 20% at most in PPF and remaining money into these ELSS. And to the extent possible, you can save, and you of course get that tax break on that. Good tax saving funds to buy, I would say Quantum Tax Saving Fund or the ICICI Prudential Tax Plan or Canara Robeco Tax Saver or Franklin Templeton Tax Shield.